one of the things that has always been tough for me in terms of sharing what I do is making sure that the underlying thought of what I'm trying to do, I get across, because I know, and I'm not poo-pooing anybody who does this, but these trade alert services are very tough for me to wrap my head around. I've never liked them, and quite frankly, they've been something that I've struggled to do myself, because think of what we've done here over the course of the last week or so. And gang, we haven't always seen things go our way, but we continue to go back to these individual currency stories. We continue to examine the biases that we have to make sure that they're valid. That's the question when it comes to bias. We have our themes, which are the data and the bigger headlines and what the market's thinking. Then from those themes, we derive our personal bias for the individual currencies. And we've built stories around these currencies. But notice we haven't done it with just a single currency. That's always my problem with a trade alert, a single trade alert. Because I don't know if, for example, the Aussie US is going to be where the Aussie strength shows up the best, or the pound Aussie is going to be where Aussie strength and or pound weakness starts banging away on both cylinders. And in today's case, the Aussie US is doing fine, but our pound US that we triggered yesterday is doing terrific. Why? Because there's no way we're going to know precisely where the Aussie is going to be able to gain against another currency. It's like saying I'm going to find the best pair to trade. Well, I think that's very unrealistic. We get to build stories, and if you notice, where are our stories? We talked about this once with the bias. Our stories are wrapped around pound weakness, Aussie strength, euro weakness, dollar strength, and yen weakness. Those are our biases, and one of the emerging biases is that loonie. So, when it comes to that pound Aussie, I just can't help but just step back and say, the pound loonie. Who knew the pound loonie was going to be a pair where we get the great push and pull? We were basing a lot of these pound shorts on pound sterling weakness. But when we get, in this case, the second currency, the loonie or the Aussie or the Swissy or the dollar, the US dollar, when we get that second currency that's weakening as the base currency, well, actually I'm talking about the pound alone, so pound Aussie, pound loonie, or the cable, the pound US dollar, I don't know which one of those second currencies is going to be strong. Because if my pound story of weakness is playing out, which, by the way, today it most definitely is, and yesterday, if you recall, it was one of the strongest. So the pound weakness is really giving us a lot of help here, down 90 pips. I mean, that's terrific. We were knocking on the door of 5,200 yesterday, if you recall. We were all over 5,200. Actually, we knocked in the door, walked through, and we were in the foyer yesterday on the 5,200 level on the pound. So there's no way I'm going to know where the push-pull is best. That's as if I know which way the market's going to move. We don't know. So we take that story and we spread it across multiple pairs, knowing that sometimes we'll get leaders and sometimes we'll get laggards. Today we're finally getting the pound Swissy coming back to us, which is great after a long road where the Swissy was actually weaker than the pound. And, where the Swissy was actually, weaker than the pound, and now we're getting that pound weakness outpacing the Swissy. Not a great, by the way, these three lots I really would like to reel in today. This is a story that I've been trying to trade my way out of, but I really want to reel this in today. So I want you guys every now and then, like I said, I've wished many times we can get rid of this P&L because it really is just a distraction. The dollars really shouldn't matter. What I want you fixed on is the pips. Notice my profits are in pips, not in dollars. So what I want you to think about is what's working today, right? And at that point, you know which pairs are firing on both cylinders. Pound Aussie, firing away on both cylinders. Pound loonie, firing away on both cylinders. Okay? My cable, not so much. It's an old cable position, but the dollar's pretty flat. So this really is regaining a lot of those pips based on, again, pound weakness. So when you build a story, remember, it's something that I'm never gonna pick just one pair and say this is the one. Notice how we've spread our stories across multiple pairs, because the bottom line is I don't know which one's going to work the best. It'd be arrogant and stupid to assume that I do. But we continue to look for those individual currency stories, and then we look for where we have the clarity on the chart, and then we enter trades based on it. So we have a lot of single lot, 1 and 2 lot positions. I could be trading much. By the way, I want you guys to notice something. Through January and February, I was anywhere from 4 to 6 lots on a lot of our trades, right? Look how much I've reeled it back. You know, if I was trading my 4 to 6 lot size here, I mean, you guys do the math. You know how much better I'd be doing. But the market and the central bank messages have changed and been muted. The market clarity in terms of trends are nowhere near what they were through January, February. March was a month of a lot of transition. What have I done? I've adjusted according to my size. I'm not necessarily not taking trades. I'm adjusting my size to manage the risk. But notice, the pound story has a sum total of, let's see, 1, 2, 3, 4, 1, 2, 3, 4, 6, 7 lots. We have 7 lots in the pound story. That's not a small position. And those are 7 full-size lots. We have 7 lots of the dollar strength story. How about the euro weakness story? We have 2, 4, 6 lots total of the euro weakness story. Okay, you guys understand where I'm coming from here? So that's the way in which we'll play each individual story. We're not going to pile into a single pair. We don't know where the push-pull is going to be best. So having said all that, what I want you guys to remember is that the pound Aussie is reaching a low that we could go ahead and we put that profit target at 55. That's for one of those lots. I don't know how much lower this thing could go. So at that point, I could use a trailing, and that brings us back to one of the tools we love to use, which is this auto chartist, and I'm going to go ahead and look at it and pull up the auto chartist story here. And what I want to ultimately find out is, since I'm putting a target for the pound Aussie, what I also want to do is put a trailing on the other lot. Is 20 enough? Is 30 enough? How much wiggle am I willing to take in order to see how low is here? Probably not a lot, because notice we are losing some mojo a little bit. You know, we haven't put in a lower low in some time. In fact, what we arguably have here is maybe the beginning of an ascending triangle where I could draw in an uptrend line like this. This would be a green uptrend line, and I have horizontal resistance across the top of this pair right here. Not perfectly horizontal, but pretty darn close. So I would like that thing to be red, because that's our resistance. Just like that. And that's the story that's playing out here. If I break that uptrend line, again, I don't want to assume we're going to see a lower low than what we put in back here around that 43.80 area. If we hit 55, great. And then I'm going to squeeze the other pair. How do I squeeze it? Let's go back to auto chartist. So I want to look at the movement per hour here on the pair. And it looks like on average, now by the way, are we in an average type day? No, probably not. The movement per day is anywhere from 100 to about 140 pips per day. Okay, and then I could take a look very quickly at what we're at right now in terms of movement. Pound Aussie, we're at 103 right now in the daily rate. That seems a little surprising. It seems a little bit low. 103 on the daily rate. Other thing we could do is just do some math on this pair. Let's get our calculator here. Maybe it is only 103, but it seems more than that for this candle. So we're talking about a high of 1.4596. So it got rejected at 4,600, which is awesome. And then I'm going to subtract from that the current low, which I hope we continue to see lower lows, but it's 44.59. Yeah, 137. So we're pushing the high range that we would typically see. We're pushing that high range here, without a doubt. So could I expect more out of this pair? Well, this thing's got its foot on the pedal, and it's about out of gas for normal historical volatility. Could we go beyond that? Yes, but is this a good place to maybe think about reeling this in? There's some thought. It's a good thought to maybe say that, yeah, 44.60, 44.55, 44.50 might be a good place to reel this thing in. Okay, so I can manage it by the hourly movement and say that, okay, I could be anywhere from about 25 to 45 pips. I'll take the average. I think that 25 pip average, 25 to 30, is probably a good wiggle for this pair. And it would put me somewhere around, depending upon where we're taking it. You know, let's say we get our 44.55 exit, and then we add 30 pips to that. That puts us around our minor psych level. If we add 30 pips to where we are right now, it puts us at the major psych level at 4,500. So we definitely have 4480 to about 4,500, giving us the major and minor psychological level ceiling. That might, some of you might say, you know what, I don't feel like giving back that much. And that's really up to you. If you want to give this thing enough room to move, 25 to 30 pips is what you're going to need to do to see how low is. And I'm talking about maybe going into the Asian session tonight, going into tomorrow's European and UK Open. So that's how we're going to manage this. We're not just going to randomly pick levels and say, oh, it's a big candle. Let's be a little bit more methodical and look at the tendencies for this pair, and that's how we'll do it. So, Sid, thank you for that question. And, it's a really good way for me to step back and say, look, this is a pair that's really working right now, but we have a number of pound weakness positions that are on the books. We just, I would love to say I knew this is the one, but ultimately I didn't. So we have a number of ways in which we can try to take advantage of it, which is why we build stories around a single currency and then look to see where the clarity is. I hope I drove that home, because it's a really important point as to the way I trade, the way I build my book, and why I kind of don't like trade alerts, just a two-line trade alert. Buy here, sell here, because it takes away the fact that there is a story that we're building, and there's a reason we're building it, because we're looking for days like today. I mean, let's be honest. We're looking for days like today. And we might sit through a couple days or a couple sessions or a couple trades where it's kind of flat or even just hurting us a little bit within our validity. But then once things start clicking the way in which we've determined they will, based on technicals, price action, and the fundamentals, we get everything coming back. And then that's where, Sid, your question's a terrific one. Let's make sure we take advantage of this and take our profits. So if we don't hit 44.55, we want to be cognizant of that 25 to 30 pips, right? That's how we want to manage it.